Hi everyone, welcome to another Learn, Grow, Invest video. Today we're going to go through the Kingston Properties Limited APO prospectus. This is one of them that we've been looking forward to reviewing. So we're going to go through it, just go through the highlights as we normally do, and we'll share the link to the prospectus in the description. We recommend that you take the time, go through it, and speak to a licensed financial advisor before you make any investment decisions. So, let's just go. All right, so I'm joined here by Chike Verwe. And if you're a part of our community, you understand why I simply have to do these reviews with Chike. We look at things completely differently. But at the same time, I think we give a balanced perspective as to how we look at companies, the areas that we focus on. And I think it's a nice compliment. So, I'm happy that he's able to join me. Chike, I take it that you've gotten a chance to read the prospectus?
Yes, multiple times. Enough for my comfort, I should say.
Yeah, exactly. You always feel like you need just a little bit more time. I've gone through it a couple of times as well. There are some areas I went over more than once, just because there's some things I wanted to understand clearly before we do this review. But I likely read it again after, simply because, I like to especially go through the financials, understand things clearly, and kind of do my personal projections as to where I see things going for the company that I'm reviewing. So before we get started, I'm just going to say a word of prayer. So let us pray. We thank you, Lord, for this day. We thank you that we're able to meet as a community. We pray, Lord, that you'll bless this community. And I pray that as we go through this session, that persons will be able to learn, make wise investment decisions. And we pray that it will just be a great time. In your name we pray. Amen.
Amen.
Right. So let us get started here. So what we're going to do, and typically how we go through these reviews, there are certain key areas that we focus on. And so I have the disclaimer here. Let me just go through this quickly. Anything that we discuss here is for education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities at all that is listed on any exchange anywhere. Okay?
Indeed.
All right. So what we'll go through here are just 6 key areas, really. So we focus on the company overview. I think that's a good place to start. We'll talk about the company, their business model, how they make money. We'll talk about what's in the offer. Why should you be interested? So we'll go through the details, how many shares are being made available at what price, some of the key dates to focus on, etc. Then we look at the financials at a high level. Now, this is not a stock review and analysis, and so we won't get to go as in-depth as we normally do, but we'll share the highlights. And as we go through the management discussion and analysis later on, we'll highlight the financials some more there as well. Next, we like to look at whether or not the company has stated their intent to pay dividends. So we'll go over that policy, talk about it. And then finally, we'll close out with, how we can apply for the offer. What are the instructions that are shared. Usually if there are any special instructions that are there, we'll share those as well. So those are kind of the things we go through here in this, particular format. So let's talk about the company overview. So they were incorporated in 2008, formerly known as Carlton Savannah REIT, Jamaica Limited. And I believe they were listed in May 2008, if I'm not mistaken, right? So that's supposed to be with the goal, right? that's a typo on my part. With the goal of being the premier real estate investment company that creates wealth for its shareholders, and following the principles of a real estate investment trust, the company shareholders will benefit both from the appreciation of properties owned as well as the distribution of income derived from these assets. And we'll talk about this a little bit more as we go through. But I like this because it states clearly what the company's intent is, and once you invest, how you make money. All right. Next, we're going to talk about how what their corporate structure is. And Chike, you want to just highlight the main things here about this one?
So the main part about this that I've noticed about different from other companies, or should I say bigger companies on the exchange, specifically with this kind of structure, is that KPREIT is a bit unique in the fact that it was actually incorporated in Jamaica. So it's Kingston Properties Limited incorporated in Jamaica, and then their expansion of incorporation to other areas in the other parts of the Caribbean, etc., as you can see there, came after. So as it stands, you have at the top level, you have Kingston Properties, and then just below you have Kingston KPREIT Jamaica Limited of itself, and then you have St. Lucia, and they've done one for Dumfries. They've also done one for Miami, and the most recent one under the KPREIT St. Lucia is the Miami and the Cayman Limited setup. So basically, you'll see as we go through the prospectus with the companies they laid out in the prospectus very detailed information about all of the properties that they hold. And this corporate structure then gives you a clear idea as to which property falls under where, as you see when we further go through the APO prospectus.
All right. So next, what they listed as well was their core investment strategy. And again, this is one of the things I kind of liked when I was going through the prospectus, because again, they make it so clear here, what their focus is. And so you can always use this piece of information to match what a company is doing to what they say their core strategy is. So we're seeing 3 key areas here. They have the core or stabilized investments, and those are properties with stable cash flows with established long-term tenants in Class A or Class B buildings in great locations. You have the value add, which is typically poorly managed properties that have below market rents, and they require some upgrading, some improvement, and then they'll get an opportunity to get more value from it. And then third, they have opportunistic or greenfield projects. That's typically properties with no cash flows and require significant investment for improvement or new construction. And, so that's 3 key areas that they focus on. What they have to the bottom right is the current split and the target split. Now, what's interesting here, when I was going through with Chike, I was saying that I like the fact that they've chosen to move away a little bit from the core and stabilize, because there's more opportunity, I think, in the value add and the greenfield. But Chike, you had some other thoughts on it? Well, what were your thoughts?
Well, my concern about it is just the fact that the core, they want cash. They want steady, stable, working cash. They're coming for this APO, and you'll see that later on as we describe it, or not we describe it, but how it's described in the APO, of the use of the proceeds, what they plan to do. And I find it, or I should say, I was just wondering why they would be decreasing their core stabilized cash flow by 9%. Now, I do take the same position that Jermaine has, in the fact that you'll see it also in the APO that they actually gained a lot from one of their value adds over 2 years. It was an extreme amount, in my opinion, right? But the truth about it is that you have to ask the question, if that was just a one-off, can that consistently be going down every single time, every single year, just like how you would normally be doing growth rate checks or growth rate estimations, right? It could genuinely be that was just a one-off. So what is the best estimation of what value add will give to them over the next 5? Let's go 5 years. Let's not go 10. So let's go next 5 years. What will value add give? Again, no risk, no reward. But at the same time, you're getting steady cash flow from the core stabilized situation of properties invested. Also in the APO, you will see that, and they spoke about this earlier on, that it is they have 100% occupancy across the board with everything. And that's great again. But again, if these particular things from the value add side are poorly managed properties that require upgrading and improvement, that's expenses, that's expenditure that has to be put out. So that's
Yeah.
just my concern, you know.
Yeah, and I think so. One of the things that we're happy to announce is that immediately after this APO review, we're going to get to meet with the CEO and speak with him directly, ask him some of these questions that we would have. I think it's a great opportunity to leverage the value add because, well, the value add is essentially going to remain the same. I like that it's a majority of the focus because to me, whereas the core may be consistent income, if there are any opportunities to give above average returns, it's not likely going to come from core. And I mean, greenfield, if there's opportunity to take advantage of a good location. I remember seeing an interview with the CEO where I was speaking with Mark Croskery, and he was saying that, you know, they want to take advantage of the growing, you know, e-commerce industry by providing those units and those spaces for potential businesses. So to me, you want to take advantage of those two areas. Core is good, but to me, if core was a majority, then it means you wouldn't see great gains or great opportunities long term, I think. So I think it's a great question for the CEO, for him to answer directly. So we'll leave that one for him, right? So the next thing that we saw here, so this was the value add that we spoke about. And I think this was a property on Grenada Crescent, if I'm not mistaken. So what they showed here, and this is what Chiki alluded to, where they were able to purchase it below market price due to the need for updates, need for renovations, etc. Then they were able to just make some improvements, invest in that property. And what they saw in 3 years was a 75% increase in the value of that property, which is why I think the value add era is a great opportunity for them. If this was investment in some core property, I don't think it would have grown in that way. Now, it could just be the valuation of the property. That's what we're speaking about here. But the fact that it was potentially, because of the current state of the property, one may say it was something that you could spend money, improve on, and then you're able to see greater value in the future. Again, this is something that I think it's perfect to ask, you know, Kevin Richards about, and we see what his thoughts are in terms of their business strategy. All right. So in terms of one of the things we also saw from the prospectus, so now in Jamaica we don't have any REITs. That's not a part of, you know, the law of the investment space here. We don't do that, but the company is modeled as such, right? So it says in the prospectus that following the principles of a REIT, the company shareholders will benefit both from the appreciation of the value of the properties owned, as well as the distribution of income derived from those assets, right? So shareholders do not need to purchase the real estate physically, but they're able to benefit by being a shareholder of the company, and they're invested in countries. I think they're in Jamaica, Cayman. They have some properties in the US as well. We'll see that in the prospectus shortly. So if you're interested in real estate, you do, or you're interested in REITs, this is potentially one of those that you could look at. All right, anything to say here, Chike, before I move on?
No, can keep going.
All right, so in terms of the offer, the date on the prospectus was April 5th. I believe it was released on the 6th. We had the opening date here as April 19th. That's next week, Tuesday. Bear in mind, tomorrow and Monday is a holiday. So you usually have the opportunity, I believe, to speak to your brokerage firm, your advisor, get information, get the forms if you're interested in applying, and so on. So you could start that process before. The official opening date is the 19th at 9 a.m. The closing date is May 10th at 2:30 p.m. And what you'll have is the basis of allotment. That's, you know, how many shares you'll be awarded, announced within 6 days of the closing date. Typically, offers are closed once they've met their target in terms of subscriptions. So whatever date that is, 6 days later is when you'll have the basis of allotment. And in terms of any refunds needing to be issued, that's done within 10 days of the closing date. And it's stated in the prospectus that this is going to be on a best effort basis, right? Which means they're going to do the best they can to provide this information in a timely manner, barring any challenges, right? Next, we have some key stats here. So the current shares outstanding is 677,652,928 shares. You can, verify this information on the Jamaica Stock Exchange website. What they're issuing, right? So without upsizing, they're going to issue 200 million new shares. If it does upsize, that's going to be 300 million, and that's the max number that you're seeing there, both at $7.50 per share. So if it is that they are fully upsized, you're going to have a maximum number of shares of 977,652,928, and the max proceeds that they're hoping to raise here is 2.25 billion. And then when they're able to cover all of their expenses, they're estimating that it should not exceed 5%. They're going to net 2.137 billion Jamaican dollars. All right. So that's the total amount of money that they're trying to raise. And what you see here are the total number of shares that will be outstanding afterwards, right? So you want to pay attention here to these numbers. I'll state here as well that the offer is being underwritten by VM Wealth for 500 million. So they have that as well, just in case you're not able to raise the full amount, right? In terms of the purpose or the use of the proceeds, there is a bridge loan that's there for 700 million. There is the development of 2 properties, and we'll go to the prospectus shortly to talk about and look at the details of this. I think that would be important to do. They have some value-added opportunities, those that they spoke about in terms of their strategy. So we'll read what the prospectus has to say about that. And of course, with most offers, there's some amount allocated to cover the cost of the offer itself, their fees that they would need to pay, etc. All right, so let us go to, I actually want to go to the prospectus to look at the use of proceeds in more detail. So all of the information that we're sharing is taken from the prospectus. And what you're seeing in terms of highlights it's just the way that I like to go through it. So I like to read details, highlight certain things, go back to it. It makes it easier for me to read. Let me actually just remove the highlight so it's easier for you to see. And that way, I'm not going to confuse you with anything, all right? So in terms of the use of the proceeds, it says here that their core business involves the acquisition or development of real estate. Consistent with that, one of their strategic goals is to increase their equity to better position them to increase their real estate under management at an optimal pace. So they had secured a bridge loan of 700 million in July 2021, and they're going to use the proceeds to be able to clear that, right? So that's one. Next, their real estate acquisition that have been made that you'll see more details on. So there was a half-acre property on Dumfries Road in New Kingston, which is a multi-story, multi-use commercial building that will be constructed. And in October, they acquired a 1.7-acre Crossroads property on which a mixed-use industrial building will be constructed, right? So they'll need capital to be able to do that. Third, we have, again, we spoke about the value-added side. So as a part of their strategic focus during the pandemic, they had been identifying distressed assets in segments of the real estate market, most likely to benefit from a recovery post-pandemic, right? So they took advantage of those, or they saw some opportunities there. And of course, having funds will help them to take advantage and move forward on those opportunities. And then finally, let me delete this one as well. Their deployment of the last raise, and I'm going to share that listing, right? Because I showed the history of rights issues, APOs that they've done in the past. So we'll be able to see that summary. So they're saying from their last raise, I believe that was in 2019, if I'm not mistaken, or 2020, it resulted in solid improvement of their financial performance for 2021, and primarily evidenced in a 65% net operating income year over year, which ultimately rebounds to the benefit of all shareholders. And what we saw was, I think, their largest dividend paid last year to the tune of, I believe, $900,000. So they're saying that, the last fundraising that they did resulted in them being able to, grow their net operating income. All right, so let me look at finding that information that I mentioned there in terms of their previous offers, right? Because I wanted to see that timeline. Which page am I looking for here? Okay, all right, I think I find it. You have anything to add, Chike? Anything that we've said so far? We're going to, so this is
right here.
what I'm looking for here. So starting in 2008, as we mentioned, they did a rights issue in 2015, $92 million, or 92, is this number of shares? Yes, 92 million shares, I believe. So they would have went from 68 million shares to 160 million.
60 million, yeah.
Did a stock split in 2017. So they went from 160 million to 321. So that looks like a 2-to-1.
2-to-1, yeah.
2-to-1. And then the rights issue in 2019, that's what would have brought them up to the 677 million. And so this is where we are now, where 200, of course, if it's upsides, it would be 300. So this will be 877 or 977 million as at 2022, right? So I like this breakdown. You get to see how many shares have been added over time. So I thought that was good detail to have, right? And it speaks a little bit about their business strategy here. So we'll talk about that a little bit. So we mentioned the case study. This is a property here. I think most persons who work in New Kingston would be familiar with it. So I think we can pause here for now and go back to just looking at some of the highlights from the financials. Let's look at some of the key ratios there. All right, so in terms of the financials, what we're seeing here is, so they've broken everything down for 2017. They were still doing their financials in JMD. So when we get to the numbers part, JMD will be for the very first column. The rest would be in USD. So the things that stood out to me, I focus on net operating margin as one of them. So we saw that going from 36.67% to 56% in 2021. Operating expenses as a percentage of rental income, that started at 63% in 2017. The most recent year is 43%. Profit or loss before income tax margin, that has been increasing from 23%. It was actually negative in 2018. Last year it was 64.45%. And then rental income as a percentage of total investment property. I think this is one of those numbers you'd be interested in, Chike, looking at that number, because I think that would be coming from the core business, right? And then loans as a percentage of total equity. I know one of the questions our community had is, what is their target debt to equity split? So that's one of the questions we're going to be asking Kevin Richards a little later as well. Anything to add there, Chike?
So I was actually focused on the net operating margins as well. So that's really very good. And understandably, as we can clearly see, the rental income of the investments, I mean, it's rather small actually in the grand scheme of
small,
things.
but more or less stable, right?
It is definitely, as you can see. But again, in the grand scheme of things, what they receive from sale of property, etc., from when they realize fixing up, doing the value add, or doing doing the greenfield projects, etc., getting that is in truth much more exponential in return once it goes well. I take one point though, and we will refer again to the interview that Kevin did with Mark Croskery, that he also spoke about that in terms of what they had seen in terms of the fact that they have really good metrics and methodologies, processes to calculate, what they would believe is a lucrative investment for them.
Yeah.
So again, having explained it, I can't, I don't find an argument really anymore, because as a matter of fact, to be very honest, before we came to do this, just reading Prospectus by itself, that was the question. Then after reviewing his interview with Mark, and him speaking to just that, because that was what was being spoken about, in terms of how they figure out how they choose their properties, what type of properties they choose to get into. And we'll talk about it later on, so I don't want to give out those little tidbits right now, but the types of properties they've chosen to invest in, etc. He breaks it down very nicely and shows the clear trajectory of where he wants under his leadership, where KPREIT is to go. So I mean, and the numbers speak for themselves, seeing that part where you definitely see that it's a minuscule amount in terms of that core business based compared to what can be realized. I just still stick on the fact that it's risk at the end of the day. So
Yeah, but you see, you need, well, yeah. Let's save it for later, right?
yeah.
All right. So let's look at the rest of it in terms of the highlights here. So their dividends paid from 2017. You saw from 200,000 US going up all the way to 900,000. So last year would have been their highest amount paid.
Outlier year.
Yes, they also changed their dividend policy last year. We'll speak to that a little bit soon. Dividend per share in USD, dividend payout ratio. That's there now. The calculation for the middle column here, 2019. The dividend per share paid here is actually slightly different from what is listed here. It's okay. It was corrected on another page. So that percentage of 20.46% is actually the amount is higher based on the actual dividend that was paid for that year. I just wanted to point that out. They have the book value per share in JMD for the first year, USD the following years. Year-end closing stock price. That I believe. So what we saw here, and this is not uncommon. This is one of the things I was pointing out to persons in our Telegram group, is that usually if there's an offer on the market at a certain price, sometimes, not all the time, you may find the stock price moving to that offer price, at least temporarily.
Until the office close.
Yes, right? So the way that usually works though, if there's an opportunity, if you like the company, that gives you a chance to take advantage. We also see here market cap at the end of each year. That would have been listed there. Let's see anything else here that we want to see. It shows the year-over-year change. I think those are the things that I want to highlight as well. They're showing the US exchange rate, which puts into context the amount of dividends paid, etc. So you can calculate those figures quite easily. All right. Yeah, you want to speak to this one?
Yeah. Well, actually, I want to go back for a second. Go back to that. Right. So sticking on this same slide and sticking to the point of their year-end close stock price, right? If anyone has done the check on KPREIT now with the APO, yes, they are going to expand and put out more units, etc. And the stock price has come back down. But the truth you need to check and see is actually if you're picking up the stock price at a bargain. Because as it stands today, I was just looking at that.
That is the most important thing to look at, right?
Right. And I was looking at it today with respect to its book value. If you drag KPREIT back to $7.50, it's just slightly above its book value, which is basically at 747 as of today. It's not here in this slide. You won't see it. You'd have to go and calculate it. But the truth of the matter is, here you're getting, it's not a discount per se, but it's the company coming very closely back to what is book value is basically their fundamental value. This is the first level of intrinsic value. So you got a company that basically put out 900,000. Now, even if we're gonna say the 900,000 is an outlier in their gross dividend payment, the fact of the matter is they still do an average, because we did the calculation, right? So the average calculation, remove the 900, they've been doing over 400,000 a year, right? And now with the change in their, or should I say, the commitment in what their payout ratio is going to be, and the next slide that we are going to discuss about that,
let's just talk about that here. Yeah,
that bodes extremely well for somebody picking up the company at $7.50 going forward. It's not about the present; it's about what the company does is what the company does going forward, and not any extended future like a whole 10, 15 years. Because again, they could easily come back to the market for another set of shares. Why is that so? Because their total authorized shares is 2 billion. Right, so they haven't hit their cap yet. They haven't hit their ceiling as yet.
Yeah, they're gonna be
right. They haven't hit their ceiling as yet. Right, this is only 900 million shares if it's fully upsized. Right, so their ceiling is 2 billion shares basically. So at the end of the day, I mean, look on the company, not where it stands right now, but where it can be. This particular dividend policy, and I like this as well too, because now they show that they plan to do their dividend payment out on the metric of how their performance from their funds from operations is going to be done. If they genuinely do take out dividends anywhere close in a band between 60 to 90%, even if they don't do 90%, they do at least 80% in that band, right? Go to the next slide now. You get the opportunity to actually track the company against what you can genuinely expect for them to be paying out in the dividend. Here is a breakdown of every single part of what makes up funds from operations, right? And you clearly see what you had in 2020 and what happened in 2021. You have the profit for the year. Let's look on that. Is only 612,000. This is in U, and everybody must be reminded this is USD. $612 million, and then they do $3 million in 2021. That is basically what? More than 4, 5, 6 is 5 times, basically, right there. Then you have other things with respect that will add to the overall value of itself, and you end up with, at the end of the day, a dividend payout of funds from operations of pretty much what is double, right? Double the amount on the previous year in 2020. That's the metric going forward. So for me, looking at what they can do, everything is very nicely broken down. You can actually hold them to account in terms of what they state they're going to do, how they're going to give you shareholder value. And I'd like to remind everybody that one of the key statements, and again, I'm going back to the interview with Mark Coskery that Kevin mentioned about this company, is that they seek to ensure that they provide shareholder value. So as a shareholder, seeing something like this happening and seeing that the company is being prudently managed, etc. I mean, it's in my opinion, that's what you want to see from
yeah,
properly managed companies.
I definitely appreciate the detail that they went through to kind of explain that, so you can see clearly. So it's not a, yeah, it's in your ability to calculate and see what it would be. So yeah, I like that. So let us go to the prospectus to go over the management discussion, and we're just gonna highlight a few things. So I wanted to point out here, let me see if there's anything there. So yeah, so I mentioned there, areas of focus that I said I would highlight. So you have investment management, property management, and business strategy. They explain those in detail. So the various factors that determine their asset selection. So Chike was alluding to that earlier, and this is something that I appreciate that they've made it clear as to how they're going to go about this. So, properties with strong, consistent cash flows, properties that are located in markets with sound fundamentals, and tenants with strong credit histories. So that is able to ensure that they're able to, consistently get that income to be able to, provide you with those dividend payments. Property management is here. You can review that. And then their overall business strategy. So I thought that was, interesting to go through, and it speaks to how they go about, just that targeted focus of operating the business. What I want to do now is kind of go through and look at, well, I thought this was interesting as well. 87.8% of the top 10 shareholders are pretty much funds, right? So, one that you're hoping to see and that you don't see now is in terms of high liquidity in terms of how it trades, right? So maybe with 300 million additional shares and maybe more retail investors taking part, then you may see more volumes being traded. So I thought I'd mention that. This was the dividend policy that we spoke about before. And this is just a summary of all the dividends paid. As I mentioned, for 2019, the other table that we looked at had the incorrect figure, but the correct one is shown here. It's verified by their audited financials. So if you're interested in seeing the detail, you can check that out. I'm going to scroll past these. We typically don't cover that here. And let's go straight to the management discussion and analysis. So this is where we're going to spend the rest of the session, right? Because we're going to maybe spend about the next 15 minutes on this. And then we're going to talk about how you can apply. And then immediately after that, we're going to have the interview with Kevin Richards. All right. So let's see, where do you want to start here, Chike?
It's short and concise. So let's go back to the top. It clearly lays out what, and I like this, what they plan to do with respect to this. They say that we know what the company's management is responsible for with respect to the integrity and the objectivity of the information contained. Now, what I like is that basically I focused on like the last couple of sentences that are the last paragraph that was there. So 7.1 is there about the company of itself, and then you get to point 3 basically. Was it in this actually? It was a management discussion? No, we were looking at something specifically that spoke about the breakout of the company of itself. This part particularly is really actually what is normally the common statement of them just dotting all the I's, crossing the T's.
So this is not the part you want to focus on then, right?
No, it wasn't this. No.
Okay. All right. Let's scroll through and start here, right? So, right. So in terms of overview of the income statement, so 39.9% increase in rental income to 2.9 million for the 12 months ended, right? So compared to 2.1 the year before. Net operating income would have increased by 64.9%. And, so there's that. So group operating expenses, including direct property expenses and admin expenses, would have increased as well to 1.3 million. Direct property expenses, and these are all the things, right? If you own real estate, you understand that all of these expenses are there. These would have declined over year by 21.4% from 400,000 to 314,000. That's good to see. And it's showing you that summary here. We spoke about this in terms of the overview. Funds from operations, that's where the dividends are coming from. So you want to watch that closely. In terms of their balance sheets, I know that's one of the areas that Chike would focus on in terms of balance sheet, wanting to see that breakdown.
Especially liabilities.
Okay, so you want to. Okay, so I know you're looking at the loans that they had outstanding, right?
Right.
As one of the areas, because they are going to clear that bridge loan. So that was one of the things that we would have noted. It's a total loans payable amounted to 17.2 million as at the 31st of December, compared to 13.7 at December 2020. So that was a 25.6 increase. So the increased loan balance, which is primarily collateralized bank financing, was deployed to expand their operating base. These are all financing to facilitate the expansion of their property portfolio and are denominated both in US and Jamaican dollars. All right. And they're showing the percentage breakdown there. That's something that you want to watch closely. And I'm interested to know what the outlook would be going forward, right? Because they're raising funds now. I figure they have opportunities to take advantage of. What happens maybe in a year or two is one of the questions that I'd be interested in asking as well. In terms of total equity, that would have increased by 6.9% over the 12 months, moving from 30 to 32.6. And now we get into the makeup of their portfolio. So we have Jamaica being 50%, Cayman Islands being 37%, and the US being 13%. So of course, for me, and this is how my brain works, I see the US as an opportunity to grow. And I know they have, I think, well, it will show here, I think Atlanta and Florida is where they would have properties, but we'll confirm soon. And I believe one of the things we saw was that they're working to expand that partnership, right? So that's something that we may hear more from them in the future about. And they would have made some investments in Cayman based on what they would have seen. So that's what we're seeing here in terms of makeup: office space, warehouse and industrial, residential and retail. I'm actually interested in this residential number because I want to see if they're going to be making or taking advantage of more opportunities like this. Or this was just maybe, I guess it was just too good to pass up. So I'd want to interested in the mix between, corporate space and residential. So we're not going to look at stock price too much, right? Because that changes daily, right? So JSE index there, same graph of the stock price. Dividends paid, we spoke about that before. So let's see here. Okay, summary and outlook. So we definitely want to go here. So there are strategies based on building a more resilient business, right? So everybody's kind of planning on preparing for a post-pandemic world. We're not fully out of the woods, but we've seen where the restrictions have been lifted and more normalcy, quote unquote, is coming back. So they're trying to position themselves for that. So there's reasonable expectation that the economies which experienced robust growth prior to the pandemic will recover much faster in a post-pandemic world. So that seems to be one of the things that they're betting on for Cayman, right? So that 37% of their portfolio, they're expecting to appreciate at a good pace based on pre-pandemic levels. With a continued growth in e-commerce, they remain bullish on industrial properties. And in terms of Chike, this seems like your thing, 5-year compound annual growth rate. So your divestment of the Florida condo, and I know you had a concern about the condo portfolio. You wanted to share that?
No, well, actually, we spoke about that. Actually, answers the question. Your thought process about their reduction in their real estate, in their residential footprint.
Yeah.
Because actually, that's what they were talking about at the time, that it was becoming more lucrative to own more commercial space. Yep. And it would appear clearly that the trajectory, based on what you're seeing there, is that more commercial. I mean, they still have parts of a condo in Florida. It's listed there in the prospectus of itself. But their primary primary footprint is in industrial and commercial real estate itself.
All right, cool. So let's continue here. So in terms of locations, you're seeing here value from 1 year to the next. Now, this is something that you'd want to pay attention to as well. And based on different factors, valuation will change, right? So for different reasons, a property may appreciate greatly. For other factors, the value of the other properties, other things that are happening on the space. So overall, their property value would have grown over 10% here. That's what we're seeing. So that's something to pay attention to. The unit in Fort Lauderdale, which was held for sale, see note 11G to get more information on that. This seems to be, was this the one that was up for sale? This is it?
The W?
Yeah, W. Yeah, so that seemed to be it, right? As at December 31st, they held 3 units which were previously acquired in 2015. Since then, 1 bedroom unit was sold, and we currently hold 2. So they sold 1.
And they're reducing the footprints. They're reducing their residential footprint even more. So
yeah, that's what it seems like there.
Yeah.
This is building in downtown Miami, Upper Tower downtown Miami as well. I like that they show exactly the properties, so you can see 155 units. I'd love to know the income specifically from this, and if there are other properties like this. I'd love to see a breakdown of income per property. I think that would be interesting to see. Let's scroll through. This is Red Hills Road. This is Spanish Town Road. This is Grenada Crescent. This was the example used for the value add. This they said was acquired in September 2020. This is on this is East Ashenheim Road. This is Dumfries Road. I think this was one of the recent ones. And these are development site. This one, Crossroad Development Site, the 1.5 acre. I thought it was 1.7 that I saw. Maybe I missed right there. But 1.5 here. And this one is 232A Spanish Town Road, 23,000 square feet. So quite a number of properties there. This is one in Cayman Islands. And where's Rosedale is in Cayman as well.
Yeah.
All right, so cool. I mean, I'd go through these. This is the one to be built, because I think this looks like a sketch. This one.
Yeah, that's still in progress to be done.
Yeah. So it says rendering. Okay. So you want to look at the timeline of this being built. Once it's completed, then income will start coming in the following quarters. All right. So let's move on here. I think this is the final slide that we'll focus on. Distribution of tenants by sector. So of course, for me, I look at the large groups here, and I'm saying where's the most profitable space? Get more of that type of business. Government is second. Financial services first, and distribution. I think this is what they'll try to grow in terms of that e-commerce space. Retail is there. That could be for the e-commerce rentals as well. And then the rest there, it's a good mix actually. So it's something that you want to keep track of over time. And this is portfolio occupancy. You want to see this. This is 66%. So that one you'd want to keep an eye on. I'd want to know what happened here. Maybe it's just a seasonal thing, who knows? But I'd be interested in finding out more about that one. And yeah, I think that's it there. So let's talk about how you can apply for the offer. Let's go back to that. So, well, actually, let me bring it up here. That might work. So they showed all the selling agents. The lead broker is VM. So if you are interested in this company, speak to your brokerage firm. If you see it listed here, Sagicor Investment, JN Fund Managers, Barita, Scotia, JMMB, and VM Wealth. You want to talk to them. If you're interested, speak to your advisor, see what they have to say about the company. And I believe Trevon shared it for us. The minimum to apply for is 1,000 shares. And you're able to, so that's an amount of 7,500 minimum to be a shareholder if you're not already a shareholder. And yeah, so normally what we would do here is go through just our questions that we have, discussion, etc. But we're going to save that for the discussion with Kevin Richards. That's coming up in 10 minutes. Now, what we'll do is we're actually going to, we normally take questions as well. So let me try to see if there are any questions that we can answer here before we close off the stream. And then I'll ask you guys to go immediately to the next one that's going to pop up on your timeline shortly. So let me scroll all the way to the top. So I think it's Yaya. Hopefully I'm pronouncing that name properly. Is asking what's an APO. So if you've heard about IPO, an APO is an additional public offer. So it pretty just means a company is coming back to the market to raise additional funds, right? So that's all it means. There are different types of ways in which an APO can be done. So what you want to do is go through the prospectus, see what the company is offering, see why they want to raise that money, and just make a decision from there. So shout out to everybody joining us here. Persons who are sharing where they're joining from. Stephen is asking if this will be recorded. So it is live on YouTube, all of our platforms now. Actually, the video will remain from wherever you're watching it from, so you can rewatch at a later date if you need to. Derby County is saying the only ones benefiting from the APO is the bigwigs.
I disagree.
I don't know what to say there. I mean, not necessarily, right? In general, yeah, I don't know. I don't know if I'd agree with that.
Put out. What do we have? Oh no, we're having a stock split, so nothing changes there. But let's think of some big companies that have done APOs, and when you look at their price right now, it's even higher. It's about your timeline and your horizon. You can't just that's why I stressed.
Everything has to be in the context of what's offered. So I was speaking to somebody and they were like, they don't like APOs. I'm like, why? They couldn't tell me why. So sometimes you just have a preconceived notion about what the offer type is. I don't necessarily think that's the best way to look at it. You want to evaluate the offer on its own merit. All right, so Derby County is saying the only goal of the retail investor should be to make money. There are many good companies on the market. However, if you invest in some, you won't get some movement until you're old and gray. Well, Derby, everybody invests with different time horizons. So there are some persons who are investing for retirement. There are some who just wants to ensure that their money is protected from inflation. Different reasons for investing, right? So all those pension funds that you see that, for example, have ownership, they're not looking for money in the short term. They're hoping that when their investors or contributors are at the point of retirement, there's actually something for them to get. And I saw the question from Orchid Doc was answered. Good evening, Emily. How can I sign up and fund an account from Canada? So Carl, you want to speak, to just reach out to any brokerage firm. I think most of them will be able to assist you to get started. We don't show preference here, so reach out to anyone that you feel comfortable with. Kevin, I'll ask you to jump over to the live that we're going to have right after this to ask that question. I think that'll make a good question to ask Mr. Richards there. Are there tips in your vast library for a beginner? Okay, not at this point, but let me see what I can do for you. Guys, we're going to be interviewing Kevin Richards in 5 minutes. Please post your questions over there because we're about to end this live, okay? All right, so let me see if there's anything else that we can answer based on what we presented here today. Okay. All right, so Akeem, if you check the prospectus, they showed how much they've paid in dividends over the past few years. So you want to look at the amount paid, look at the shares outstanding, and you'll be able to calculate the dividend there, or how much you would potentially receive if you have shares. yeah, so all of these questions, guys, let's take them to the next slide. We'll answer them there. If not, we'll answer them in the comments after the video. So hopefully you did find value in this video here. Thank you so much for joining us. If you're watching on the replay, remember to leave this video a like. We really appreciate it. It helps our channel grow. I'm really looking forward to this interview coming up. We have a lot of questions for Kevin Richards. And so we're asking you to join us over there. So we'll see you in 5 minutes. We want to allow some time, you know, just in case we need to troubleshoot any sound or any technical things for the other stream. So we ask you to just give us 5 minutes and we'll see you over there. If you're on the replay, we're going to link that video right above. Just click on it and you'll be able to see the interview. So again, thank you for joining and we'll see you shortly. Let me share that link actually in the chat.
Yeah, that'll be, yes,
right there.
so that everybody can just go right over there now.
Yep. All right. That's the link. I just dropped it in the chat and I shared it in the Telegram group earlier. If you're not on Telegram, join us over there as well. All right, cool. So we'll see you guys in about 4 minutes. All right.